Hi all. Today I'll be covering some of the terms used in the market. So this will help you to understand what the other person is speaking over the TV or any of the digital media which is happening. To start the thing, I'll start with the same default things. Like we have three exchanges are there: BSC, that is Bangalore Stock Exchange; NSC is National Stock Exchange; MCX is Multi Commodity Exchange. In BSC, only delivery trading is allowed, and in NSC, we have a currency and equities. Here, you can do the delivery trading, futures and options, currency futures also you can do it. In MCX, we can do only commodity futures and options trading only. This is allowed. And trading hours is usual from 9:15 to 3:30 is equities. Currency is from 9 o'clock a.m. to 5 o'clock p.m. and commodity exchange 9 a.m. to 11:30 p.m. The weekdays, Monday to Friday, apart from the public holidays, this trading happens kind of. Assuming you bought a share in a BSC in the delivery, you can sell that share in the NSC also. There is no hard and fast rule. If you buy it in BSC, you can sell only in the BSC only. There is no such rule. If you buy in NSC, let us say currency that is not getting traded in BSC or MCX, you have to sell it only in NSC only. Similarly, MCX is always traded only in the commodities, so that will be traded only in the MCX index kind of. And apart from this, FNO futures and options is as per expires as per the contractual agreement date, which is given in the particular stock. And the commodities and currencies, it's traded only FNO only. There is no delivery option. These are the types of trading is allowed. Delivery. Suppose you are buying a 100 rupees stock, around 100 share. You need to have minimum of 1 lakh rupees to buy that share. In the delivery, you need to have that money, without which you cannot buy it at all. Then the next type is margin trading, we call it, that is MIS trading. For that, you don't need 1 lakh rupees. There is an amount is fixed by the stock exchanges, which will decide the amount what it is needed kind of a thing. So that in the same day, you have to book that stock. That is a key thing about MIS trading. Cover trade is another kind of a product wherein the exchanges will give additional leverages. Let us say you will buy it 100. They will ask you to put a stop loss at some value. That much of a leverage amount, you need to keep it mandatory in your account. Futures and options are the derivatives product. We have two types of things is there: weekly contracts and the monthly contract. Weekly contracts of the equity expires on every Thursday, and the monthly contract on the last Thursday of the month expires kind of thing. Apart from the AMO order, there is another type which we call it as, this is after market order. Suppose a stock is getting traded at X value. You want to place a sell order at a particular value, you can use the AM order. In the same line, you want to buy a stock before market itself, you want to place an order, you want to go out somewhere, then you can use this option. There is another thing called basket order is there. Suppose assume that you want to buy multiple shares at a one point of time, we use the basket order option. Alert. Alert is, suppose you are getting into some meeting or something, or you are getting into outside, you will not be able to track the system. Then what we can do is we can set an alert system. If the value crosses this value, or if the value goes below this value, you send an alert to me, an email or a message kind of thing. That is what it is used for. Then see, as I mentioned, let us say, assuming this here I taken a stock called ITC. Here is the spot price is the first line which shows. These are the bidders, buyers and sellers values it shows here. And apart from this, we have open. What is the price it opened for the day, and what is the high which made for the day, and what is the low it made for the day, and what is the previous close, yesterday's close, how much it was, it will show. And the volume, how much is the quantity which is traded as of now, that is the information. Apart from this, let us assume a stock which is there, which is having a circuit limit. Maximum it can go up to this limit, and upper side it can go up to 410. That's what it's trying to say. And value is set by the exchanges depending on the norms kind of. This circuit is slightly different for each of the stock. Suppose if it is a cash stocks, It's between 5 to 20%. It depending on the volatility of the stock, the exchanges have decided. The 10% to 20% is for FNO stocks. From first to 45 minutes, assume that 9:15 market started till 9:45. A stock can move maximum 10%, and there will be some kind of a block. I mean, they will not allow trading if it happens after 10% before 9:45. Assume at 9:45 it has hit at 10%. Then they will allow up to 15% till 10:45. Then assume that 10:45, the 15% is it. Then they will open the market till 12 o'clock for 20%. And after 12 o'clock, it can go to the infinite level, whatever they only for the FNO stock. But for the non-FNO stocks, assume that B level stock or Z level, depends on the circuit limit is set. It is 5%, 10%, 15%, or 20%. Whatever it hits, afterwards the trading will be halted for the complete day. You will not be able to trade anymore, either upside or a downside. Anything is possible. As I explained earlier, futures options is mainly meant for both buying and as well as you don't have a share in your account, still you can sell that particular share. You can buy an additional quantities which you wish, kind of a thing. And in futures options, two types are there: CE and PE. That is call option, which is a bullish trade, we call it as. Assume a stock which is moves from 100 to 105, we call it as a bullish. If a stock moves from 100 to 95, we call it as a bearish. The terminologies which is used is CE for call, PE for put, kind of a thing. The settlement is T+1 and T+2 as usual, which is defined by the settlement from the SEBI guidelines. See, here is one picture I showed across. Just I taken a typical example how the premium changes from 1 to 6 and 6 to 1, kind of a thing. Assume the spot value of a stock is 100 rupees. We call it as at the money. And out of the money will become 75, 80, 85, 90, 95. And 105, 110, 150, 100 is also out of the money. As usual, the simple terminology is as per the English, which I'm trying to explain. Out of the money, at the money, kind of. Assume that the spot price premium is quoting at 6 rupees at 100. Then 95 will be the premium for the 95 strike price, 5 is. And 105 call, CE, it will be quoting at 5 rupees. 110 CE will be quoting at 4 rupees. 115, like this, keep on reducing it. Actually. In the same line, PE premium also keep on reducing it. This is a typical example. This is not the exact value. This is as per the, just taking an example to explain you how it works. Kind of. Then, you see, assume that the spot price of ITC is quoting at 380. ITC future price is quoting at 375. There is no hard and fast rule. If it is the spot price is 380, it should run at 85, something like that. There is no rush. Depend on the demand supply management, these values is it. Some stocks will quote at 385, some stocks quote at 375. Apart from this, you can see the value, volume, how much it is quoted, open, high, low for the these future value is also there. And expiry date is a very critical. February 23rd is the date this particular contract will be. Suppose you buy this, you have to book this stock before 23rd of February. That is what it's trying. For this particular future value, what is the spot value is trying to show it. Then, which I explained in the PECs, which I explained, these are the different strike rate: 380, 370, 360, 340, like this different strike rates will be there. Those premiums, see, for example, 380's premium is 7 rupees 70 paisa. 370's CE is 12 rupees 70 paisa. See, if you notice, 380 PE is 12 rupees 90 paisa and 370's PE is 7 rupees 50 paisa. It's just the way in which it's keep on changing for the each strike rate. Apart from this, in the particular strike rate, let's assume 380 call we have. This is the buy, this is a sell, this is depth, this is chart, this is delete from the portfolio list, kind of a thing. And apart from this, these are the different bidders which are available to buy and sell, kind of a thing. Here is a high, low, open, all these values are available. Expiry date is a very critical thing. What is the spot price is 380 is another important thing. Same way, we have a lower circuits are there, upper circuits are there. For all the things, there is an upper circuit and the lower circuit is there. Those will be open depending on the SEBI norms. See, this is how the particular option chain depicts in the NSE exchange. The left-hand side, whatever you are seeing is all call option. The right-hand side, what you are seeing is all put option. OI is open interest. Change in open interest for the day. Volume, IV is another thing. LTP is what is the value which is getting quoted kind of a thing. And net change from yesterday to today kind of a thing. Bids and offers. Similarly, for the put option, same things is available. And suppose if you open an account in Zerodha or Upstock, RFIS, any other ICICI Direct, these are the accesses which is needed for you to trade actually. Suppose you want to trade only in the delivery, NSE equity and BSE equity is sufficient. You want to trade in futures and option, NSE futures and option, NSE currency exchange is needed. You want to trade in commodity, only commodity access is needed. Apart from this, see, we go to moneycontrol.com/market/global index. Here we can see how the Dow index, US index is performed, and S&P index, how it is performing yesterday, and NASDAQ is performed yesterday, and your European market, how it performed, and how tentatively our market can open, which you get it, this information in SGX and Nikki, which is open in the early morning. How is it going? This is another view in the investing.com. You can view all this information similar. Apart from that, these are the important websites which we use it to track the stock market. Screeners.com for the fundamental information, investing for the charts, money control for the information again. Pulse is for the news. NSE exchange will give the complete information of all the stocks. BSE.com is another one. Trading view, we use it for tracking purpose. Similarly, chart link is for screeners. Thank you.